Alrighty. So, yeah, what's risk premium harvesting without a little risk, right? Um, let me just show you the let me just show you what's happening with the trade. Um, mm, 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 yeah, screen is visible. Great. Um, so yeah, the trade is now long deltas. Let's just do a replay of it. You guys can see my screen, right? Just my computer is really slow, so I'm just closing all these extra tabs. Let's click on replay and let's just do a replay of when we actually put this trade on and where we are right now. Yeah, ji. So this is when we put the trade on, the market was at 23,600. The market is significantly lower now. We put the trade on 6th Feb. So what we'll do is, let me just show you the evolution of the trade. Our maximum pain point was around yesterday when I sent the message in the group. That's where we were down. That's 11th, 12th Feb. So yesterday morning, I think, yeah, the market opened lower, like down like 1% or something crazy, right? Um, so yeah, this is sort of around the max bleed that we were facing. Let's go over here. And I didn't rebalance because kahan gaya? Yahin pe hai, theek hai. And I didn't rebalance because I was like, I'll just rebalance at the end of the day if I really need to. And usually what I would do is, because it's such a low risk strangle, low risk in the sense that it's so far out. Um, I would probably look at it at the end of the day, and that's what I just do. Every second day, every third day, I look at what the position is doing at the end of the day. This What has happened in the past 4 or 5 days is not out of the ordinary. Um, it's just the markets move, right? Um, so this was the point of max pain. I decided I'm not hedging right now. As a rule, I just say, okay, I'll just hedge in the last half an hour or so. Or if the market was down like 10%, maybe I would think about doing something. But when I put this trade on, um, let's go back to the original trade. So previous trade. So when I put this trade on, um, I my max profit here is 25 and my max loss is 80K, right? So um, this is the risk that I'm accepting, that, okay, you know what, I'm taking this risk. That premium exists, that volatility risk premium or the variance risk premium that exists. We've seen it in the data. I've been capturing it over the last 1 year, just putting these kinds of trades on, doing a lot of experimenting along the side. But fundamentally, the position that I'm putting on is sound, right? But you're not going to be compensated for uh, not taking any risk. And this is the risk, and I accept this risk. I'm going to manage this risk by looking at the different risk parameters that exist, as we talked about in the um, lessons, right? There are, whatever the risks are, I'm going to just accept them and I'm going to manage them. And in this case, we're actually seeing it manifest, right? We've seen like 5 consecutive negative days now, which is good. Like, it's a good stress test for our strategy and for our heart as well. So when we put this trade on, the market was 23,600. Abhi the market is down 600 points, and we're not that bad. In fact, today we were in the green when the market was up. You've seen the market has made like this inverted U today, right? So when the market was up, we were actually making money. We were like, again, like $500 up or something like that, and then the market sold off. So um, let me just show you what I meant by that comment, right? So whatever could go wrong has gone wrong, but it could be a lot worse. Um, let's see. Um, Nifty price historical. हाँ हाँ ब्रो, सेशन ले रहा हूँ मैं, एक बता। अर्जेंट। कॉल बैक करता हूँ तुम्हें। Sorry. So let's download the prices since the day I put this trade on, and let's see what the RV is doing. And I wanted to show you guys something interesting with the RV as well. And I'm doing this like there's a tool for this. We're going to expose this tool for you guys pretty soon, the realized volatility calculator. But for now, um, I'm doing this manually because I think it's a good sort of practice to at least know how it's done manually. So let's open it here. Let's open this guy here. And we put this trade on 6th Feb. Okay, so today is the 13th Feb. So we're going to look at these data points. Okay, sorry, I'm not sharing my Excel. One sec. Just share the Excel with you guys. All right, so let's just calculate. So this is an interesting point where let's calculate the logarithmic returns like we do. We're looking at the close price ही देख रहे हैं ना, close price देख रहे हैं. All right. So when I sent you guys this message, the market was at its absolute. Let me put the, let's calculate the, I need to multiply this by, so format, and then, wait, okay. So see, this is showing a 9% RV, which is much lower than the IV that we sold, right? But I have a question for everybody. What would be the RV if the stock went down 1% every day? What should the realized volatility be if the stock just goes down every day for the last four days? So what we've seen is 4 consecutive down days, right? And uh, let's say the market went down. I'm just putting it here, -1%, -1%, close to close, -1%. So this is actually a flaw in the way I showed you guys how RV is calculated. Akshansh, excellent, right? The answer is 0. Right? That's let's calculate it, right? So यहाँ पे हमने what is the formula we put here? What is the standard deviation of these 4 numbers? I'll just move this here. The answer is 0, right? Let's, for the sake of completion, let's multiply it by this. ठीक है ना? So let's say I sold a straddle on this day. Let's say I sold a straddle on the 6th, and the market went down 1% every day. Um, According to this, the realized volatility is 0, which means what should the price of the straddle be? If I were to, like, how would you price the straddle, right? If the realized volatility is 0%, you can't really price the straddle. So the formula uh, that exists for realized volatility, where this is like a very simple estimate of realized volatility, where we say, hey, just take the sample standard deviation and it'll give you a fair enough estimate. But this breaks, because if I'm using the realized volatility to price my options, I'm saying, hey, this is what the realized volatility is, then at least I should use this as an implied volatility number to price the option. Then I can't use this formula, right? And let me just share my browser, and we'll come up with a solution over here. Let me just share my browser. when we look at this, any realized volatility formula, they're saying realized variance formula. So this is an interesting one. Let me show you some more. Yeah, too many ads. Let's look at Zero Tha Varsity. अभी नहीं आया. So these guys are using also the standard deviation function, which is the standard deviation. Um, ठीक है? So Zero Tha is using the standard deviation function, and this website is using something else. भाई इतनी ads हैं, बंद करो इसको. And this is using a slightly different function. ठीक है? So let's go to Excel again. And I want to sort of differentiate between these two calculations. In the long run, they kind of converge, but in the short run, if I have to calculate the realized volatility, Excel, and to actually tell you how much the realized volatility was over these last uh, 5 days and how we should be pricing the straddle, it's not 9%, it's much higher than that. Okay? So what we'll do is, let me open up another Excel. I'm not sharing my Excel. Yeah, Akshan, so good question, right? So I'm only hedging at the end of the day. I'll decide whether I want to hedge or not. So Akshan's question is, why are we using only EOD prices? We can use any sample. Um, and the answer is, whatever sample you use, there's always going to be a sampling error in measuring realized volatility. Also, like, this is a subtle question. I am going to be hedging probably once a day, and I'm only going to be doing it at the end of the day. Okay, so I'm not really interested in the intraday volatility. My trade is 42 days long, right? Since my trade is 42 days long, uh, maximum my trade is 42 days long. If the vol dips, once I put the trade on and I get some profit, then I'll probably get out of it, right? So using 1 minute data is totally overkill, or 5 minute or any minute bar is totally overkill to calculate realized volatility. And it gets you closer. Like, sure, when you use 1 minute data or whatever, it gets you closer to the instantaneous volatility. But I'm okay in taking that sampling error. One sec. So let me just, bro, अभी 1 lot है तो loss doesn't matter, but ये 100 lots, then risk management का कुछ होना चाहिए, right? So Harshit, the answer here is कि this is just one of many ways in which you can express this VRP trade, right? And you should not be putting 100 lots on this particular trade. If you have the capital to do 100 lots, you should be diversifying it, or even to capture VRP. There are like different ways in which you can capture VRP, right? This could be one of the different ways in which you're capturing volatility risk premium, but this is only one. ठीक है, देयर इज इंट्राडे भी कर सकते हो, पोजिशनल भी कर सकते हो, स्ट्रैडल्स भी कर सकते हो, हेजिंग डिफरेंटली कर सकते हो, डिफरेंट टाइम्स पे बेच सकते हो. इनफैक्ट अभी विक्स थोड़ा बड़ा हुआ है, तो आई वुड प्रॉब्ली से कि चलो यार, अगर मेरे पास 10 लॉट बेचने की कैपेसिटी है, जब हमने बेचा था देन इट वाज वॉल वाज एट लाइक 13.5, राइट नाउ is at least 14.5 हो गई है, विक्स इज अराउंड 15, right? I could probably say कि you know what, there's a little bit of a spike in volatility, I can probably add to my risk a little bit now. So there is, matlab, position sizing plays a pretty big role, especially when you're trading positional strategies like these. That's one way to mitigate your risk. Another way to mitigate your risk was we just bought wings, right? So I have position size in the sense that this is a 20 lakh account. I have some other trades running in it, and I'm like, okay, you know what? For a demo perspective, I'll just do this VRP trade. Uh, Again, like, so you're saying I only do intraday, but again, so it doesn't mean that there's no edge in positional. You should in fact mix your intraday with positional, because on the day where this was losing money, my intraday was making money, right? The market, it just trended, right? There was such a secular trend on that particular day, so intraday made money that day. Anyway, let me just show you guys. I'll just copy this formula over here. So what I would urge is, when we do the realized volatility lecture, which is going to be lecture 3, ठीक है, उसमें what we are going to do is, uh, in the first batch, what I had done was I had just said, hey, just use the standard deviation formula. Okay. In the next batch, what we are going to do is we are actually just going to replicate the standard deviation formula with on Excel, and then we'll adjust it to this formula, which is a slightly better approximation over the short run. In the long run, they both converge. So ये जो formula है ना, मैं अभी तुमको दिखा रहा हूँ, but we'll do it in यहाँ पे आ जाता है, and मेरा data range है I62 से लेके, एंड दिस इज अ वेरी नुआंस्ड पॉइंट कि भाई आरवी कैसे कैलकुलेट हो रही है. आई डाउट कोई भी तुम्हारा ऑफ द शेल्फ सॉफ्टवेयर है ना जो रियलाइज वॉलेटिलिटी कैलकुलेट कर रहा है. आई डाउट एनी ऑफ दोस सॉफ्टवेयर्स आर एक्चुअली डूइंग इट इन दिस वे. One sec. I62. If you guys don't understand what this formula is doing, I'm going to go over it in a lot of detail in lesson 3. 65. That's what we did in the first. Sridhar is asking, what if we calculate standard deviation based on the log change, which is kind of like, what do you mean by log change? Actually, we've done it with log returns. So यहाँ पे अब देखो, between the two formulas, the difference is, so the regular standard deviation formula is giving me a 9% realized volatility, but the formula that I put in, the adjusted realized volatility formula, is giving me, इसको भी format कर लेंगे, paste special formatting. Yeah, that's what I'm doing. So this is the logarithmic function, and I'm calculating the logarithmic return over here, Sridhar. So anyway, so actually the volatility, if I use close to close, was 14.2%. And when I actually sent that message to everybody, right? So let's see the time at which I sent that message. The market was down like a good 1%, and we were showing an 8,000 rupees ka loss, right? So I didn't hedge, but I wanted you guys to experience that sort of pain, or see me experience that pain a little bit, right? कि भाई 8,000 का loss हो रहा है. So that was at around 10:13 a.m. and 10:13 a.m. market की price क्या चल रही थी? What was the price? Let's replay that on this. ये आ गया मेरा simulator. So let's go here. अरे भाई zoom की इतनी चीजें आ जाती है ना सामने स्क्रीन पर. You can go to Feb 12th, confirm, and around 10:13 a.m. is where we were. So let's go 10:13, done. So 22847. So if we just go back over here and change this close price, so the market rallied yesterday, right? Yeah, I don't know if I'm gonna make an adjustment. I won't make an adjustment. I'll just be like, let it be. 22847. यहाँ पे आ जाता है 22847. So if I just replace the price, so at the time when I sent this message, right, my actual realized volatility was around 16%. That's what it had realized over the last 4 days. ठीक है. So, and we had sold a 13 wall. So of course there's going to be pain. Okay? And it wasn't just realized volatility because of the decline, like the secular decline over the last 4 or 5 days. Um, I had accumulated deltas also, right? So, um, so what we'll do is in one of the, is somebody saying something? So what we'll do is in lesson number 3, we'll calculate both these numbers using our hand as opposed to the standard deviation formula. And like, this is something I want you guys to think about, right? That if I use my formula, this other formula, it's not really my formula, it's not a proprietary formula, it's a pretty well-known formula in the market. In fact, one of the blogs that I just opened today had this particular formula. So यहाँ पे, if I move this to this guy, right, my difference in volatility will be so between 0% and 18%. You guys see this? Paste. मिट्टी बड़ी उड़ रही है यार यहाँ पे, बहुत मिट्टी उड़ रही है. My food is here and there's like a lot of anyway, whoops, this looks wrong. So into square root of 252, my bad. 9%. You guys have any questions? Eat some food. Market is going back down. VIX is up. I could probably put another trade on. I could add to this trade. I won't do it right now, but I could technically add to this trade if I wanted to. Yeah, I'll share it, Yashwant. I'll share this Excel sheet. Yep, yep, yep. I'll save it and share it. And that way you can take a look at uh, the formula that I put as well. Give you some context. I don't know. I would have probably looked at the market, Akshansh, and possibly like the easiest adjustment is this one, right? Like, let's do this. I'd be like, okay, man, I'm wrong. Let's get out of the way, but let's sell a more expensive one. So I would probably be like, let's like restrike this. The easiest adjustment would be just, let's restrike it, come here, and let's sell the 30 delta option again. Hopefully, what I'm selling it now a little bit more expensive, right? So I would be like, चल भाई एक और बेच के देख लेते हैं. I could have done this. Um, it was like the dumbest adjustment I could do. Okay, let's restrike. Um, and this is not a bad way to adjust it. Okay, guys, any more questions? So the thing to understand is, guys, this is like, I mean, this is a very basic trade. Okay, for a beginner, somebody who's just dumb doesn't mean it's not useful, Harshit. Harshit is saying if the dumb way, show us the good way. Like dumb doesn't mean it's useful. It's not useful, right? It's very useful. I don't know. I'm not looking at the pricing of individual wings and deciding कब बेचना है, कौन सा बेचना है. This is a very simple trade, and the whole idea. So for almost everybody here, this is the first time you're looking at the market with a volatility lens, right? So um, we want to keep the trade very simple so that we can understand these different nuances around risk managing a position that is created with the volatility lens in mind. ठीक है ना? So um, that is the idea behind this particular course as well. Like we want to use as simple a strategy as possible to learn more and more about volatility. And like I said, like each of these 8 or 9 lessons that I've given, every lesson could have its own course because it's like a very, like they're all very, very deep topics, right? And I've only just scratched enough so that it gets you to a stage where you can put a trade on and then manage it and understand why you're losing money if you're losing money. That's the whole goal of this course. Okay, volatility trading is really hard. Trading is actually really hard. You guys have been told that trading is easy, and every not just you guys, everybody in the market has been told that trading options is very easy, and everybody has come and started trading thinking that is really easy. And the consequence of that has been that 9 out of 10 traders are like losing money in the market, right? So my job is to tell you it's not easy, um, but you can, if you make the right moves in the long run, you can. Um, yeah, IV is pretty standard, but IV maybe there's some issues. So just one thing, IV calculated using one standard method only. Can we rely on Sensible's output for IV? I don't know. I haven't used that platform for IV, but I do know that they are wrong in their explanation for why IVs decrease on Fridays and subsequently increase on Mondays. They say it's because of um, मुझे इतना पता है they've been wrong. ठीक है? Uh, and I can go into it. They've been wrong at something that they had mentioned in one of their blogs or explanations when I was looking at their platform. Yeah, it's not really the weekend effect. It's a very subtle concept. Ki it may look like hey, vol is decreasing on Friday and then increasing back on Monday because people are selling into Friday, but that's actually not the case. And I'll go into that at a later date. It's out of syllabus for right now. Anyway, guys, I'm going to end this. Half an hour ho gaya. Just wanted to show you guys that there is pain when you're selling options. This is like, um, and it's good that we saw like 5 consecutive days that the market is down because that also opens up the point of what the hell is actually realized volatility. And our the standard way of calculating realized volatility and what you guys saw on the Zerodha blog is not the only way, and it doesn't work when the market is trending very aggressively in one direction or the other direction. Okay. So, all right, guys, I'm going to end this now. I'll share the recording later and I'll share the Excel as well. See you guys. You can ask more questions on the Discord channel. Bye. Hmm. Where do I go? End.